Welcome to TradeTheNBI.com. This is John. This report is for the 27th, and the continuation slowed down just a little bit. We got into a little bit of a soft patch the other day. We're still with cyan below red, but turning back up immediately. Strong turnaround for the ES, though, from long-term buyers. The excitement of the idea that there will be some form of infrastructure stimulus. The questions are still going to be, though, how much. But the overall exuberance that there is going to be activity for growth as opposed to no growth policies. This does present some headwinds. You're obviously going to have some international issues, and the dollar will be a question right now. Dollar's in a very comfortable range for the S&P, so we don't see that as a headwind. We do have some positive extremes, which means the little breakout will get retraced, but that's not that abnormal. Just going to kind of backfill into it. It simply happened over here when we had the first run up, came back, did it sort of an intraday kind of, swoop down, but needless to say, we're still pressing towards the break of the 23, and I think we're on our way to the 2350 without much difficulty. NASDAQ also exhibiting, it's getting a bit to the extreme. Once you get over this plus 15 range, then you start looking out, because this one's going to reach 25, which is another line. If we just right click, we can add it in there and you can see it. And that's just warning points to say, hey, this is getting frothy. It can continue for a while. I think at that point we'll be looking for the breakdown in our shakeout, and or typically at this particular point you would look at the gold line here. Once it turns flat and starts to move down, then you've got clear indication that the market is going to start fading. And so, like the euro I was talking about, it's in the bottom side of the zone. We're outside of the key range that is most advantageous. The central banks have been propping it to keep it from going under, but the dollar strength is going to be uncontrollable to some degree, which in a way is not just inflationary, but a tax on American goods at the same point. So people talk about these trade issues and that, well, even if you add a tariff to somebody, all you're doing is normalizing dollar value in some cases. So it's much to do about nothing. I think that it's not really anything worth it. It's a great negotiating tactic. It's got people frightened, and when they're on edge from a negotiating standpoint is a good thing. From a stability of policy, some people get a little nervous about the uncertainty. Obviously, you had the Mexico situation where they pulled out of the meeting they were supposed to have, and that's going to happen. I think that at the end of the day, Mexico doesn't really have much of a choice. In this particular case, majority of their trade comes through us, and if tax is applied to pay for a wall or pay for anything else, it's just a tax. I mean, you can always say that anything is allocated to paying something for a tax, but that doesn't necessarily make it so. It goes into their general fund, and it's blown on that $1 trillion deficit anyway. So TLT, the bottom side of the range as we came back up here, we're still expecting a move much lower. Could take a little bit of time. I mean, obviously the Fed is going to have to evaluate and wait and see if things actually fill in. I still think there's a bit of slack that some people don't believe exists in the labor market, which is going to prevent inflation, especially in the early run, particularly since we were already headed towards a recession just as the election was happening, and some of this renewed optimism may stay some of that, but that doesn't necessarily mean that the headwinds of the slowing economy don't still exist. Oil's just going to stay right there. I could draw the same lines across it and be doing the same thing. And then a nice retrace in gold. And like I said, in the sell signals coming back when you get the new buys, great opportunity to jump back in. The positive extreme for this one right here was already filled right in the next day, so there's no requirement there, but we're approaching the nice ABM numbers. And I think that becomes active plays if you missed out on any of this run from the earlier buy that I gave at the 109 range. You got the ABMs right around the 112, and a clear DOC spread there. So no question about that. And that's just simply because it's not going to represent the inflation or the destability that some people were predicting. A lot of nonsense with some of these discussions. But here we've had choppy flatness, and you can see when the shakeout goes into just like a neutral zero, which is kind of where we were at. We were sort of like break even to just slightly minus, and that's why the majority of the shakeout was sub zero level. But right now, possessing a little bit of weakness. Not a ton. What are we, minus a couple points? Yeah. So it's just the absorbing of the couple day move. I mean, that was a significant multi-day move. If we go back all the way here, you got to absorb some of that, a little bit of a pullback into it, give people a chance to reset. So that's what we should be doing, preparing for the weekend. I think we might see a little more volatility on this Friday, but things have surprisingly become a little easier. This was an easy long call from early on. We could see the pent-up opportunity with the fact that we were already oversold and hadn't really dipped any. And there's a lot of people betting on extreme bearishness. I mean, there was so many articles coming out that were all negative. That's usually an indication that, they need some more shorts to come in so that they can go against you and force the cover, which seemed to have worked because that was a nice rally. I love to watch those things happen. I mean, it was good that we reported it as it was taking place so that there was no confusion for anyone. As always, though, trade well, and if I get an opportunity, I will release this shakeout adjustment. The colors will be different. It'll just be green and red. Take out the cyan in that, so it'll make it very easy to see that green is for long, red is for short. White's going to maintain sort of a neutral or in-between stance. I'm working on filling in those so that it will just become all red and green at one point, but a little bit at a time for each of those. And that's the nice thing about this one, is that language is a little easier to convert to strategy than trying to do it from the paint bar status. So that's why I chose that from an indicator standpoint. As always, though, trade well. We'll talk again later.